Happy Saturday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Asia, Europe, and North America. My name is Tony. Let's jump in. And first up, as geopolitical tensions spike, Iran appears to be rushing to export crude oil at a breakneck pace, signaling an urgent effort to maintain revenue streams in the face of possible military escalation. Satellite imagery and export data indicate that Tehran is pushing out as much oil as possible while simultaneously bracing for potential strikes on its infrastructure. The move comes as the United States considers joining Israel in launching strikes on Iran following Israel's recent attacks targeting the Persian Gulf nation's nuclear and military sites. Despite, or perhaps because of these assaults, oil exports have surged, showing a remarkable 44% increase to 2.33 million barrels per day in the first 5 days following June the 13th, according to tankertrackers.com. The surge is likely part of a calculated logistical maneuver by Tehran to protect its oil income. Iran is flooding the market with exports, even as storage tanks at its critical Krag Island terminal near the Persian Gulf brim with crude. Satellite imagery from Planet Labs taken on the 11th of June showed most of the storage tanks were only partly full, but by the 18th of June, after Israel began its strikes, those same tanks appeared full, with no visible internal shadows indicating that the floating roofs had risen to the tops of the tanks. Quote, "This pattern suggests that Iran is pumping even more crude into the system, stockpiling for rapid export before further escalation," end quote, said Samir Madani, co-founder of tankertrackers.com, in a statement yesterday. Iran's actions demonstrate a strategic calculation. With roughly 28 million barrels of storage capacity at the island, some of it recently expanded, it appears Tehran is attempting to minimize future disruption by maximizing current output. Quote, "They're trying to get out as many barrels as they can," end quote, Madani explained. Satellite data also shows that tankers are now minimizing their time at the island, waiting offshore until the last possible moment to approach the terminal. By June the 17th, all tankers had vacated the usual anchorage sites near the island. The strategy of dispersing vessels mirrors Tehran's response to the previous Israeli strike in October, when it similarly maintained oil flows by minimizing exposure at the port. Floating tankers are considered less vulnerable than clustered onshore storage, especially in the event of missile or drone strikes. Iran's export drive also holds broader implications for global oil markets, with Tehran channeling large volumes of crude, much of it ultimately bound for China, into the market at a volatile moment. Oil prices could be buffeted by both the supply spike and the risk of future supply interruptions. As Washington weighs its next move and military tensions remain high, Iran's oil calculus is clear. Move fast, move cautiously, and keep the money flowing while it still can. Next up, Russia's economy is on the verge of falling into recession, marking the first major public admission that the war-fueled growth, which followed President Vladimir Putin's 2022 invasion of Ukraine, is running out of steam. Now, before we go into the story, I am not suggesting that this means that Russia's war is running out of steam per se, but rather that the wider economy is in trouble. If history teaches us one thing, it's that the leadership will likely put the pain and weight of this on the general population and keep the war activity going. Speaking at the St. Petersburg International Economic Forum, Economy Minister Maxim Reshetnikov acknowledged the slowdown, warning that, quote, "We're basically already on the brink of falling into a recession," end quote. The comment underscores mounting pressure on a war-driven economic model that has delivered rapid GDP growth in the past 2 years. 4% annually, thanks largely to soaring defense spending. That surge, however, is now reaching its limits. Russia's 2024 defense budget hit a record $167 billion, lifting wages and tightening the labor market. But persistent inflation, near 10%, a hawkish central bank, and supply constraints are now choking off further expansion. Reshetnikov criticized the Central Bank of Russia for high borrowing costs and called for a more balanced approach to monetary policy. The CBR recently cut rates by a percentage point to 20%, as inflation cooled slightly to 9.20%, but the governor reaffirmed her commitment to the 4% inflation target. Quote, "The economy of demand grew and the economy of supply lagged behind," end quote, she said. Putin, who has so far backed this cautious stance, has begun signaling interest in compromise. On Wednesday, he urged officials to, quote, "ensure balanced growth of the economy and its structural changes," end quote. But with industrial lobbies complaining and consumer spending fading, the effectiveness of of war Keynesianism is increasingly in doubt. The cooling economy is also exposing the long-term damage wrought by war and sanctions. Despite Kremlin hopes, multinational companies remain absent. Inditex, owner of Zara, and once one of Russia's biggest foreign retailers, stated this week that it has no plans to return. Western firms are holding firm, deterred by sanctions, asset seizures, and the broader climate of political risk. Domestically, the vacuum left by departing companies has allowed politically connected buyers to flourish. State asset grabs, including the recent nationalization of Moscow's second-largest airport, have further undermined the business climate. As UK-based Financial Times commentator Martin Sandbu put it, quote, "Putin now has maxed out the benefits of this war Keynesianism," end quote. With no slack left in the economy, the damage to civilian sectors is becoming increasingly apparent. Calls for additional Western sanctions, particularly on Russia's energy exports, are gaining traction. Divisions within the G7 have so far limited further action. Nevertheless, Russia's wartime economic engine, it appears, is beginning to run out of fuel. If you want to keep on top of the most up-to-date analysis on the biggest moves in markets around the world, make sure you're subscribed to Market Update, and if you're getting some value from today's episode, don't forget to hit the like button. And finally for today, two stories from North America. Firstly, the US Supreme Court has declined to expedite a legal challenge to US President Donald Trump's sweeping tariffs, rejecting a request from two family-owned educational toy companies. Learning Resources Inc. and Hand to Mind Inc. had asked the court to bypass the normal appeals process and immediately consider their claim that Trump lacked authority under the 1977 International Emergency Economic Powers Act to impose the tariffs. The justice's decision on yesterday means the Trump administration now has the standard 30 days to respond, rather than the expanded timeline that companies sought. This marks the first time Trump's tariff policies are being tested before the Supreme Court. The case focuses on the US president's 2nd of April Liberation Day tariffs, which include a blanket 10% levy and steeper rates on certain trading partners. It also involves other tariffs linked to anti-fentanyl efforts. The Federal Appeals Court will hear related arguments on the 31st of July. As for the second development, SoftBank Group founder Masayoshi Son is spearheading an audacious plan to create a $1 trillion industrial complex in Arizona, codenamed Project Crystal Land, with the aim of reshoring advanced manufacturing to the United States and accelerating the age of artificial intelligence and robotics. Son envisions a sprawling, Shenzhen-style high-technology hub focused on AI-powered robots and industrial automation. He seeks a partnership with Taiwan Semiconductor Manufacturing Co., TSMC, to bring the project to life, hoping to capitalize on the chipmaker's pivotal role in producing AI chips for NVIDIA and others. However, insiders suggest TSMC has no current plans to participate, emphasizing that the project does not impact its $165 billion investment plans already underway in Arizona. SoftBank has begun sounding out potential partners and investors, including top US officials such as Secretary of Commerce Howard Lutnick, as well as executives at top technology giants like Samsung. The project's feasibility hinges on support from the Trump administration and state-level incentives. Son is reportedly pushing for tax breaks to attract manufacturers and startups to the industrial park. Crystal Land represents one of Son's most ambitious ventures yet, in a career marked by massive risks and occasional extraordinary returns. It comes as SoftBank, which had 3.4 trillion yen, $23 billion in cash as of March, accelerates investments in AI, including a potential $30 billion stake in OpenAI and the Stargate venture alongside OpenAI, Oracle, and Abu Dhabi's MGX. While plans remain preliminary, Son has outlined potential participants from SoftBank Vision Fund portfolio companies specializing in robotics and automation, such as Agile Robotics SE. The company is also exploring project-based financing, a model used in large infrastructure developments to mitigate upfront capital needs. Still, significant questions loom over the scale and demand for such a development. Quote, "He's a long-term thinker, and he takes risks," end quote, said Melissa Otto of Visible Alpha, adding, quote, "but it's just too early to tell," end quote. Shares of SoftBank rose 2.7% Friday on the news, with TSMC and Samsung also gaining. Yet despite the initial market enthusiasm, Son's record of intermittent execution raises questions about whether Crystal Land will become a cornerstone of the AI era or remain just another vision from one of tech's more restless minds. Okay, that is today's special Saturday episode of Market Update. If you got some value, don't forget to like and subscribe. Sharing is also a big help. Thank you for watching. Have a lovely weekend. Have a restful weekend. And I will see you for a new week of updates on Monday.